EMCAP.com. Bryan, you guys have really kind of tweaked your process. What amazes me coming from the residential lending side is your ability to get things done quickly. Speed is a key ingredient to your process.
It is, yeah. That's why borrowers come to us, is speed. So really over the last 6 months, we've spent a lot of time and money on our process to approve loans faster, the tools that we have to underwrite deals, and just get the loan, like I said, get the loan approved, get it closed so the borrower can buy that property. Maybe they're gonna renovate it, flip it for a sale, or take it to a bank.
From application to close, if somebody needs to move lightning fast, how quickly can you do that?
We've done it in 5 to 7 days, which, that's all hands on deck. So it is possible, if title's clear, things like that. But, 2 to 3 weeks is more than enough time. Really 30 days is a year
for
us.
you guys. Yeah, from the residential side,
yeah.
30 days is considered quick, and we can do it faster as well. But 5 or 6 days is impossible just because of RESPA and the guidelines, the compliance piece that we have to deal with. You guys don't have that on your side.
We don't have the compliance that the traditional side does. We don't pull appraisal or do appraisals generally, unless it's a big commercial deal. So any residential, single family, multifamily, we'll do our own comp analysis. We only do effectively what you call stated income, right? So we just get a personal financial statement from the borrower. We're not digging into tax returns, bank statements. So really for us, it's what's the property worth now and what is it worth fixed up. And if we can do that in a few days, we're off and running.
And you guys are doing this, you can only do this strictly for investment properties, correct?
That's right. Yeah, like we've talked before, only investment property, can't do owner occupied if it's their primary residence.
Right. Now, you guys also do some stuff that doesn't exist on the residential side. There's some funky ways to structure these deals. I know you're in the middle of one right now that's different. Great opportunity.
Yeah, we can do quite a few things. Again, not like the traditional side. If borrowers have, maybe they own a few properties free and clear, right? They don't have any debt on a couple of properties. We can use those properties as their down payment, so they're effectively into it for 100%. We also allow seller second mortgages. So if in the case that we were talking about, the borrower in southern New Hampshire is buying a 12 unit. Purchase price was $520,000. Seller was holding $100,000 as a seller second. So the buyer only had to come up with $420,000. We funded $350,000 of that, and seller sat behind us. So the borrower, instead of putting up $150,000, $180,000, he only came up with $70,000.
Wow, that's really
for a $520,000 purchase.
And something like that,
purchase, yeah.
Right? So the seller would be getting X amount at the closing, and then in this case, be getting another chunk of money, $100,000 or whatever it is, plus the interest a year or so down the road, whenever that comes due.
Yeah. So for the seller, he was getting $420,000 at closing, $420,000, and then $100,000 in 12 months, 12 to 18 months. So for him, tax-wise, he's spreading out his tax liability as well.
Yeah, it makes sense. Yeah. And the other interesting thing, so you were saying you can leverage other properties. So somebody could go in, buy an investment property. If they have other real estate assets, you can leverage them and actually not come out of pocket any
at
cash.
All. Yeah.
Interesting.
Yeah, I have another New Hampshire scenario, southern New Hampshire. Guy came to us looking for about $500,000 for a construction loan to build a house. He owns 3 investment properties nearby, all free and clear, probably total value $600,000. So we're doing 100% on the construction loan and just taking one of the other properties as collateral. So when he sells that house, he'll just pay us off and we're out. We'll remove the lien from the other property.
That's unbelievable.
Yeah.
It's really cool. You can do some outside the box type stuff. Now let's talk about that investment market. I know a lot of neighborhoods in and around the greater Boston area, it's slim pickings. It's you have to really be a pro to find these deals. And as farther away you get from the city, there's a little bit more opportunity. Where do you see the direction of the market right now? And really, is there any opportunity out there or certain areas that are hot?
Yeah, I mean, obviously Boston is a hot market. It's being absorbed by some big development companies that have grown over the last few years. So for the one-off investor, it's definitely harder. I see them going in areas such as Dorchester, Haverhill on the North Shore, Worcester to some degree, and even further out. prices are lower. The downside is when the market turns, those markets are typically the first to go. So you want to be careful about that. But I think there are still opportunities in these hotter markets. It's just a lot harder. They're certainly harder to find.
And there's ways to get around it. There's interesting ways to structure deals without using cash.
Yeah. Sorry, is the people who are trying to compete, there are multiple offers. I've seen investment properties go on the market, or fix and flips, let's say, and there are 30, 40 offers, usually cash. So if a borrower doesn't have cash, they can use a hard money lender like us and say, well, I'll close in 2 weeks with this hard money lender. Otherwise, they're not going to get the deal if they have to go traditional.
Right.
Yeah.
No, it makes sense. If you're looking to put together an investment deal and want to connect with Bryan and the team over at EMCAP Lending, you can check out emcaplending.com. Bryan, thanks for stopping by.
Yeah, thanks for having me.
As always. Remember, we have more real estate investment tips just like this right here on boston.com.